Hey folks, how's it going? It's Evan Saint-Gerard.
And I'm Dean Graber. Everyone
All
can
right.
introduce themselves.
Welcome to our home buying seminar. This is the first one for the year 2021. A little bit about ourselves. I'm Evan Saint-Gerard. We've been working as a team, myself and Dean, as Team NWE at Keller Williams Realty I've been working at the company for about going on my 9th year. And we work with buyers, sellers, and we work in Queens, Brooklyn, Long Island, and the Bronx. And that's all about me. Now it's Dean's turn.
Okay, so like Evan said, my name is Dean Graber, same office, Keller Williams, and Evans and I have been working for a team for the 9 years at Keller Williams, and we work mostly, we work with buyers and sellers. I work a little bit more on the seller side. Evans works a little bit more on the buyer side, but on every transaction, whether you're a buyer with us or seller with us, we do work the deals together. Behind us to help people out in the deals, we have administrative assistants and some marketing people also. So we do everything as a team, and you know, the best part of our team is right here, which is Angelo, Billy, and Eric
Eric.
Firestone. And the reason that we're doing this seminar is just to give people information that you may want. We're going to ask you what kind of information you want a little later on today. Also, just give people information that they want that would be helpful to them buying a home or selling a home, if that applies. And that's it. We've been working with customers for years that we do like over and over again, a lot of repeat business with our past customers. And we just try to, like I said, we just try to be helpful to them, use the experiences that we've learned. And the thing is, the market today is different than the market was last March completely. And last March is completely different from the summer, you know, before that. So things are changing, and some of the old ideas about how you buy a home or how you sell a home that are out there don't apply anymore. And then there's some great new stuff that's come up, you know, as far as helping people, stuff that would be interesting to know. So that's why we're here. We want to share that with you.
All right, just a little housekeeping. If you have any questions on the bottom of your screens, depending on what device you're looking at, there is a Q&A button. You're going to click on that. If you have any questions, put them in there. If you can't find that, you should see a chat button on the bottom somewhere of your screen or on the top. Put your questions in there and I'll be answering them. As we do that, we're going to keep continuing with the introduction. So which one of you gentlemen want to go first?
I'll go first.
Eric.
I can go first. So my name is Eric Firestone. I'm a real estate attorney. I've been practicing law in New York and Queens for the last 26 years. And my firm is a dedicated real estate firm, which means all we do is real estate. We don't do any other kind of law. We refer people if they need something else, but we do real estate law. We represent buyers and sellers, and we also represent lenders. We have a staff that's completely dedicated to making sure that everyone's needs are met and that every transaction goes as smoothly as possible. Basically, my job as a real estate attorney is to make sure that the buyer or the seller is protected throughout the transaction. So it starts off at the very beginning with the buyer getting their home inspection and me reviewing the home inspection with them and identifying certain issues and working together with the realtor, Dean and Evans, and with the other attorney to make sure that all items that need to be addressed are addressed. Then we go to the contract and review the contract to make sure the contract is to your liking, make sure that it protects you legally and has all the necessary things in there. We review it in detail. And then we basically, once the seller signs, we assist you through the transaction, assist you in terms of keeping track of things for your mortgage, reviewing title, make sure you have clean title to the property. And then when everything's done and you're ready to close, we sit with you at closing, go over all of the documents, make sure that you understand everything that you're signing, why you're signing it, how much money you had to bring to closing, giving you a breakdown of what you spent, and making sure you get the keys to your new home. And as a seller, making sure that you are able to sell the property and to give the keys over to the new buyer, and making sure that you get everything you're supposed to get. That's essentially what we do. One of the things about my firm is we're very accessible. All of my clients have my cell phone number, so that we make sure that you can reach me at any time. We understand that a lot of times issues arise in a real estate transaction that don't fit in within business hours. So evenings and weekends, I do my best to be accessible to everybody to make sure that I can, address any concerns that arise during non-working hours. During the week, Maria, my assistant's in the office, and she's there to help all of my clients as well to get us through the transaction. So between myself and Maria on cell and in the office, we pretty much have you covered and make sure that we're accessible and we can answer all your questions and hold your hand through the process. That's about it.
Awesome. Thank you. And next, I guess last but not least, are the Gionis brothers, Billy and Angelo, or Angelo and Billy.
Go ahead, Bill.
Hi, my name is Billy Gionis. I'm a mortgage banker with Fha Mortgage. I'm partnered with my brother Angelo. We've been in the business for over 22 years working together. So again, same like Dean and Evans, we are a team. So anything that goes through me Angelo will be involved with and assist you in any way possible. We have a lot of wonderful loan programs that we can discuss and talk about to help you obtain a mortgage as a first-time home buyer, or if you're looking to buy a house as a second home or an investment property. We'll definitely be around 24/7, so you can contact us anytime on our cell phones, text, email, and we have a whole staff of team that's located in both Queens and Long Island that can help assist you with anything that you may need. And
Nice. Yeah, so I just want to follow up on that. Bill's been my partner for 22 years. So one of the things people say, what's one of been your greatest accomplishments? I've been with my brother 22 years and we still talk, So if we could do that, I could definitely, handle any issue that's out there and stuff like that. So our goal is just to educate, talk to you along the process, make you understand all the different options. We're going to go over some of them today, but really what we want to do is just give you a nice taste of what's available. And then if we could schedule a one-on-one afterwards and really dive into your personal situation, that would be super helpful. And if you have any questions along the way, feel free to use the chat. We have a nice small group. We like to keep our seminars small so we could give one-on-one attention. And if you need anything, questions asked or answered, we're here to help. So we're looking forward to helping you and getting a home.
All right, so I think the next part of this is Angelo and Billy should, people's most common questions are, how much does it cost? How much money do I need? How do I get started? It's a money thing, a lot of it. But one thing I just wanted to touch on, similar theme that Eric said and that Angelo had said, where Eric, you can reach him. He's an attorney who gives you his cell phone number. It means kindly don't call him at 2 a.m. on Sunday night. But the point with that is that he's accessible. I mean, everybody, most people are working Monday to Friday, 9 to 5, and then they do their real estate stuff when they come home or on Saturday or possibly on Sunday. So it's great that, that to be around on the weekend when you're buying homes that your home team is with you and available to you. And the same thing with what Angelo says, but just about being comfortable, being accessible. This is it could be a stressful thing, buying a home. It doesn't have to be. A lot of the stress is just not knowing what comes next, not, calling and leaving a message and not getting an answer, not knowing if this is good or not good, or okay to proceed or not okay to proceed. So one of our goals is to get rid of all of that, by being a good team together to help you guys, to help everybody out.
All right, Dean, I just want to acknowledge something. All right, so the few of you, I don't know if you noticed that there's a question, there's a survey, a poll that came up. So I see 6 people are here. Basically, 4 of you have already answered. So if the other 2 can answer those questions, then we'll know exactly where we want to go basically with the seminar. And I saw a question from Jeffrey. He wanted to know regarding the down payment. What is the down payment percentage needed to get a loan? So
Yeah, I kind of just jumped in on answered that question. So if you have any questions along the way, feel free to ask them and one of us will try to answer it right away for you. You could buy a home for as little as 3% down. And based on the programs and the qualifications, sometimes there are grants and stuff like that available. So the answer would be 3% is the lowest amount in regards to a down payment, depending on a program. Most of them are 3.5%, 5%. There's pros and cons to putting less or more money down, and we could talk about that along the way.
the only time you could put a little bit less than 3% if you're a veteran, they do offer 100% financing. So if you are a veteran, they have some amazing programs for you.
Okay, I'm just resending the poll because someone just asked me regarding that. So from what I saw, is basically a lot of people are looking to buy, since there's 6 of us here. A lot of people are looking to buy, a few people are renting right now, and the time frame people were looking to buy based on the poll was some people were looking to buy as soon as possible. 2 people I think wanted to buy within 3 months, some at the end of the year, and 1 basically within 6 months. So one of them owns a property, the other is renting, and pretty much 3 people so far have said basically they wanted to buy. So we'll keep it catered to buying. Now, for the person that's owns right now, if they're looking to buy and sell at the same time, we can help you with that as well. So let's start from the beginning. You're starting the process, you're buying. You want to know where to start. First thing you should do is get an inventory of what you're looking for, find out what your needs and wants are. You want to get pre-approved first. So I'll let the mortgage gentleman speak on their pre-approval. What's the process, how long it takes, and then we can get back into the real estate part. Billy, Angelo?
Okay, so I'll jump on that. You know, one of the things we say, it's very easy. You're looking for what's called a CIA approval. You know, if you want to write down those letters, CIA. The first credit, what we would need to do is whoever's applying for the purchase, whether it's 1 borrower, 2 people, or 3, get as many as you need. We would have to run your credit and take a look at that. So that's step 1. That could be done over the phone or via Zoom. We could go over everything on the credit, see if there's any issues or not, then we could discuss that. So let's just say the credit is fine. Then the next step would be reviewing the assets or your income, which is the I. So your income is your W-2s for the last 2 years and your tax returns, 2 current pay stubs, and then we could figure out exactly what your income is. And then the A would be your assets. Where is the money coming to purchase the house? Is it in your checking account? Is it in your 401k, your savings account? You can get a gift from a family member or a friend. You may be getting a grant from one of the programs we had. So there's a lot of different options. So the most important thing is get approved with someone, some lender looking at your credit, number 1. And the credit scores you want to have, obviously the highest credit score you could have is 850. The lowest credit score you could have is 300, just so you know. For mortgage purposes, you want to be in the 600 range. Okay, a lot of our programs start at 620 or higher. We do have programs that go as low as 580, but you know, those programs, you have to meet certain criteria and stuff. So 620 is the score, and anything higher than that would achieve a better rate for you. So those are types of credits. So they're very lenient on the credit scores, which is great. In terms of the income, like I said, we would just need 2 years of income on yourself. And then in regards to the assets, we would just need to know where the funds are coming from, how are they positioned, and if you don't have them and you're getting it from a family member or friend, you would just have to document that.
What do you mean by how are they positioned?
Well, what I mean, how are they positioned? When you purchase a home, we have to look back the first 60 days from when the contract was signed. So if you're jumping into a house in October, we would ask for in advance 2 months of bank statements. Those bank statements would determine how much money you have in your account. So if you don't have enough money in your account from those 2 months, there's a couple different ways you could get the money. Number 1 is your pay stubs along the way to plenish that in. If you had a 401k, which you're borrowing from, or if you're getting a gift from a family member, and that could be given at any time. So those are some of the different ways, along with a grant where we would give you some of the money for the down payment and the closing costs.
Okay.
All right. So after you sat down with the loan officer, you got all those numbers taken care of, and you know exactly what your mortgage will be, what the closing costs could be. You have a number, you're comfortable with it. Now you're going to reach out to a realtor, be either myself or Dean, or whoever you choose. If you don't have someone, you can get a recommendation from your lender. The lender basically will recommend, the top agents, and your top agent basically will sit down with you and do a consultation before you go out looking at homes. You don't want to go, hey, you know what? I got my pre-approval. Let's go run out looking at homes. I'm assuming a lot of you like to save time and like to save energy. You don't want to waste time running around looking at this and that. you want to basically, there's a limited amount of time and a limited amount of homes out there. So you want to make sure, hey, you know what? Let's itemize exactly what we're looking for. Let's see what's out there. Let's do our research to see what towns we want to be in. So that's some of the things we'll be discussing at the consultation. Usually most consultations about 15 to 20 minutes, depending on whatever your needs are, your family needs are. Could be a little more, could be a little less. Once you do that consultation, you know exactly what you're looking for. Everybody's on the same page. You're going to go out and look at some homes. And then once you look at some homes, you're going to see which ones that fit your needs the best. The ones that you love, not like, you're going to put an offer in. You're only going to put offers on the homes that you want to purchase. Now, remember, when you're putting in an offer, you're competing against other buyers, not the seller. I'll repeat that one more time. You're competing against the other buyers. So, Dean, you want to take
Can I
this
say
one?
something like that? The most common question when we're making an offer, when a buyer, working with a buyer and they're making an offer, at least from the realtor's perspective, is they can ask me, what will the seller take? What's the seller looking for? What price are they looking? And one of the things that's different in the market in 2021 and the last few months of last year, it's not even up to the seller anymore in a sense. There's so much competition with other buyers, and that's fine. You know, we're gonna try to show you how to be at the top of that, at the top of that competition. But it's what other people are offering. So if a home is selling for $500,000 and 3 people are offering $505,000, then the seller, who might have had $490,000 in the back of their mind, when they priced it at $500,000, that might not be in their mind anymore. So we'll let you know what kind of competition there is in the house, well, in the neighborhood, then in the house, and then this, in this particular home. So we'll speak to the listing agent and we'll let you know exactly what's going on there as best we can.
All right. We have a question in the chat. It's from Michael. He wants to know, how can you how do you start how can you start working with a realtor? I would suggest you Google search everyone, check out the reviews. You want to make sure everything in the reviews are recent, and also there's a long. You want to make sure that basically the person's been working for a while. You want to make sure that everything's consistent in the reviews, just like you would buy a new phone or whatever device. You read the reviews. The same thing you would do with your professionals. You're going to ask questions from other professionals as well, basically. So let's say we're talking to your lender first. You're going to ask your lender, who's your top agent, basically, that can help first-time buyers such as myself, and they're going to have some recommendations. So you're going to go off those recommendations, ask them questions, and if you feel comfortable with them, that's who you're going to work with. Hold on one second. We have a question. It sounds like there's less competition for buying a home during COVID. Is that correct? Dean, you want to take that one? There's a
All right.
two-part question.
So actually, COVID's created a little bit of a phenomenon where a lot of people want to get out of their home, and people that, and that would be people that are homeschooling. So there's a lot of renters or people that own condos and co-ops, but let's just say renters or living with family, and they're home now more often. So and this might be you, who's listening right now. It might be the case right here. People are home. Mortgage rates are below 3%, I believe. And with the combination of that, it's getting people this opportunity to, hey, let's get out of my house. I've been spending so much time in my home. It's not working for me. I need a backyard, a front yard, a side yard. And so it's creating a lot of competition. Now, there's not as many sellers right now as there used to be, because the sellers who have this front yard, backyard, side yard, maybe COVID is affecting them a little bit in their thought, and they're not putting the home on the market as quickly. So we have less homes on the market, and a lot of buyers that really want to take advantage of these low interest rates. As far as how homes are shown, sellers aren't letting people in homes like they used to. The word open house is used too loosely these days because they're not truly open houses anymore. We do them the way we're supposed to do them. Hopefully every other
By appointment. Everything's by appointment.
Yeah, it does too. So it's by appointment, and to get an appointment, you need a pre-approval, and there's a COVID questionnaire and a COVID disclosure, and you have to keep that current. It shouldn't be more than a week or 10 days old. When pre-approval can be a month or 2 old at the most. Over a month starts getting, get that refreshed. And COVID disclosure only, I'd say, about 10 days. And we show that to the buyer's agent, to the seller's agents, and get you an appointment for an open house. So not everyone's coming into a house like they used to be. Also, when you're going out to a home, don't bring your aunts, uncles, kids, and everybody. Initially, it's just the principals, you know, whoever the one or two people are that are actually buying the home. You guys go look at the home initially. Obviously, if you want your family to see it before you make a final decision, we'll get, you know, that'll get taken care of. But less people come into homes right now than used to.
Well, less people in the group, you mean? But to answer the original question, he wanted to know basically, it sounds like there's less people, less competition out there to buy a home. But the answer to that is no. It's more competition actually, because of exactly the fact that you just mentioned. Was pretty much a lot of people have been cooped up. They're
Evans, can I
realizing.
just jump in on that real quick too?
Sure, let me just finish this point.
Sure,
A lot of
sure.
people have been cooped up for a while, and they're realizing as they're in their home, they're realizing this space is not big enough for what we need right now. So that's forcing them to go out. We need a bigger space or whatever the situation is. And then you had a question about how long do you anticipate this will last? I'm not
Wait,
sure I
but
understand
Angelo
that
wanted to
question.
finish the answer with that other guy.
I know, but that's the second part of this question. So
Okay.
Angelo, go ahead.
Okay, yeah, just real quick. One of the things we've been seeing is a lot of times when there's an open house, you would sometimes get people that were just looking, you know, just want to see what the house was worth, or what they call as looky-loos, where they're not really interested in buying, but they really wanted to go out and just see what was going on with the properties. One of the things we're seeing right now is everybody who's looking at a house right now at that open house is very much serious in buying that house right away. And what they're seeing is with the inventory being a little bit short, that we're not asking anyone to move foolishly, but what we're saying is since the inventory is small, the opportunity to purchase these homes has to be taken very quickly, because before you know, that home is off the market quick. So what's happening is transactions are moving much faster in the beginning because there's so many people looking at a limited supply of houses. Evans, if you want to jump in on how long you think it's going to last.
All right, so I'm not sure I understand the question. I'm not sure if you mean by the process itself, or if you mean basically the COVID and everything that's going on with the restrictions and whatnot. I'm not sure if I understood the question. If it's about how long the process lasts, I would say depending on how soon you identify a property you like, put an offer in, and the offer gets accepted. It could be depending on what kind of property
Well,
I'm
Bill,
seeing.
why don't Billy or Eric answer that with Billy with the process?
We have a ton of questions coming up.
Yeah.
But go ahead.
So real quick, just generally speaking, once you go into contract, it's 60 to 90 days, generally speaking, 2 to 3 months from the time you enter into contract to the time you close. That's generally what we're looking at these days.
That's it. That's the answer.
That's it.
Actually, Eric, the next question is for you. When can you start working with your attorney on the transaction?
Okay, so in terms of when you call your attorney, I mean, technically, I guess when you put in an offer and your offer is accepted, the realtor is going to say, okay, we need to put your team together, and you have an attorney, and at that point, you may start looking. The problem with that is that, as was said before, that you got to move quickly because properties can be off the market very fast in this market right now. So my advice would be when you start looking for houses, when you start engaging a realtor, that should be the time that you're actually starting to put your team together. That's the time that you should be starting to talk to attorneys, engaging attorneys, speak with them, and find an attorney that you want to work with. So that way, when you do find a house, you put in an offer, it's accepted, you're not then just starting to find your attorney, find your mortgage person. You have everything ready to go. You can give it to your realtor, and the realtor gives it over to the seller's realtor, and that makes your offer more effective. It makes you seem more organized, and gives the seller the impression that you're serious and ready to go. So I would say as soon as you really start the process of looking is when you should start engaging the services of a lawyer.
All right, so for all those that agree, all the panelists that agree on what Eric just said, raise your hand and say aye. Aye.
I
All right, so as soon as possible. Next question is coming from Jeff again. He wanted to know, he's hoping to buy something in the city, and he heard that a lot of the condos are going to be available because of a lot of people leaving. They're moving out of the city and the suburbs. They're moving out to the suburbs.
We've heard the same thing.
Yeah. So that's a yes and no. the city and the boroughs base are two different markets, are two different animals. What's happening in Queens is different, slightly different from the Bronx and vice versa. But people are moving from the city and whatnot. It depends on what your price point is. We can have a conversation about that as well after this is over. He also had a question. He meant the COVID restriction and impact. That is a good question. That we don't really know the answer of when the restrictions will change. We're in this with you guys as well, just like everything else that's going on in everybody's lives. COVID has changed a lot of things, so we're just rolling with the punches, just like you are. We're learning how to adapt, and we're making business happen with our clients. I hope that answers your question. Let me just see. We had a question in the other chat, basically. Can you review some of the different mortgage programs? Billy or Angelo, who wants to take that?
Sure, I'll handle that. So there's two main loan programs that are really available for most borrowers. The first is an FHA mortgage, which is for first-time home buyers solely. The benefit of a FHA mortgage is it allows you to put as little as 3.5% down. They have very lenient underwriting guidelines when it comes to debt to income ratio. What that means is when you're qualifying for a mortgage, everything's calculated off a monthly basis. So they calculate your monthly payment against your monthly debts, meaning your auto loans, cars, student loans, any credit card debt you may have. And it goes into a formula. And then as long as you're under, we can go as high as 57% ratio. So for example, if you're making $10,000 a month, you can actually, with all your minimal debts, go up to $5,700 a month with your new home included as a monthly payment. And that'll allow you to buy a house. I know you'll qualify for that mortgage. And that's what we look out for when we're actually talking to you and doing our analyzation of your documents. The FHA loan is also fantastic because it also enables a borrower to have what's called an assumable mortgage. And what that means is that right now the rates are at all-time lows, where rates are in the low to mid 2% range for FHA loans. You can actually sell your house with that interest rate in the future, where someone can assume the current mortgage that you have. If, let's say, rates go up to 5%, 6%, you can sell the house and market it with a rate of 2.5%, 2.75%. And more people will be apt to go look at your house with that advantage as opposed to getting a mortgage on their own, where interest rate could be slightly higher at 4%, 5%, 6%. The second type of loan that's really available is the conventional loan. The conventional loan allows people to put as low as 3% down. But the benefit of conventional loans is more people go for it if they're going to put 20% or 10% down. If you put 20% down, you avoid what's called mortgage insurance, which is an extra monthly payment that gets calculated into your monthly liabilities and keeps the payment cheaper for you. Conventional loans are for people that have the better FICO scores. So ideally, it's priced better when you have 740 or above. But the pricing is still fantastic if you have 700, 720, just it's a little slightly worse. So ideally for conventional loans to get the best rate, you're looking at 740 score or higher. There's also some great first-time homebuyer loans called Sony May. Sony May is a state of New York mortgage loan that's offered by New York, the state of New York. What it enables you to do is they can actually get you a grant of up to $15,000 or 3% of your purchase price to help assist with any down payment that you may have or closing costs that have when you're purchasing a property. These are for first-time home buyers solely. They are a little strict when it comes to qualifying, so you do have to meet lower debt-to-income ratio guidelines. But again, if it's something that you want to do, we can absolutely run it through. We're one of the top lenders with Sony May, and we find it one of fantastic programs for first-time home buyers.
All right, there's another question. With the rates being very low, does it pay to put down less?
All right, I'll jump on that one. That's an excellent question. I think it really depends on each individual and what their goals are. So that's really important when we sit down with each client one-on-one. But the one takeaway I want to tell everybody, for every $10,000 you borrow with the rate so low, your mortgage payment only increases or decreases $46 a month. So some of the questions you want to ask yourself: would I rather put $20,000 extra down and save $100 a month, or would I rather have that $20,000 in my pocket to maybe do renovation, invest, so on and so forth? So I spend countless hours with so many of my clients discussing, is it more valuable to put more money down or less? And some of the things you really want to think about is, when you're buying the home, do you need extra money to renovate the home? If the answer is yes, maybe it's better to keep a little bit of reserve to use that money. Another question that comes up a lot is, after I purchase the loan, if I don't have the money for furniture, renovations, where am I getting that? If you say a Home Depot credit card at 19.9%, I think that's something you might want to say, okay, let me put less down and let me keep a little bit more. Now, one of the panelists asked to go over the CIA approval again. All it means is this: when I sit down with a potential consumer looking to buy a home, we have to look at your credit, which is C. So we run your credit. As long as you have a 600 credit score or better, there's options for you, depending on the loan program, like Billy said. So the first thing we do is review credit. And the interesting part about credit, usually 50% of the time, if we run someone's credit, right, you're going to find a mistake or something that's not on there. So the most important thing is not only to run the credit, but to review the credit to make sure everything's accurate. So that's one. Number two is income. Depending on how much income you qualify for, that will determine how much of a house you could qualify for. So that's very, very important. And then assets are where the money coming from for the down payment of the house. If it's 3%, is it coming from your checking, your savings, your 401k, your stock, a family member, a gift, a sale of a property? So that's what a CIA approval is. We offer them to all clients. So if you are interested in talking after, let's sit down and let's get that done, because you know how much you could buy, and then we would issue the approval and give it to the realtor so they can move forward. And Eric, another question that came up, that what are some of the challenges with COVID that you're seeing with contracts? What are the things you try to look out for during COVID? And what are some of the unique niches that need to be protected for the buyers right now?
Well, right now, a lot of times, less than several months ago, but we've been seeing a lot of COVID riders in our contracts, which makes sense. It basically states, I mean, there are various types of COVID contracts or COVID riders. The one we see most of the time is some acknowledgement from the seller and from the purchaser that both parties understand that because of the fact that we're in a pandemic, things are moving slower, takes longer to get title reports, takes longer to get loan commitments, people are working remotely, things aren't moving as quickly. So the parties are acknowledging that while there are firm dates in contracts, like for instance, you may have 45 days to get a mortgage, the parties understand that it may take longer and they're going to be giving extensions or for closings. The biggest thing I'm seeing these days right now, depending on the lender, is it's not getting the commitments, it's getting the clear to close. That seems to be the biggest issue that we're facing right now, is that you have a buyer, you go out, you put in your application, you get approved, and then you think, okay, right after that, we're going to close within a week or two, and it's taking much longer to get to closing. And I spend a good part of my day right now, and my staff, navigating that and navigating anxious buyers and anxious sellers. I can tell you that despite all of that, everybody closes, and I tell everybody to take a deep breath, whether it's my buyer or my seller, and everybody's working together to get things done. So right now, that's the biggest issue, is getting things to closing. That's the biggest, I guess, challenge right now. Banks have a lot of files right now, and volume's high, interest rates are low, and people are working remotely. So that's the biggest issue that we're facing. But I will tell you that everything closes, and that's the biggest thing. You have to realize that while it may take a little bit longer, things are closing.
All right. Well, with we were talking about the whole process from start to finish. Where we left off was pretty much you already sat down with the loan officer, you got your pre-approval, you know how much you're spending, then you met with the agent, talked to the agent about what your goals are, where you want to be, and all that stuff. So then we moved from there. Basically, we went to go look at houses. We found the house that fits your needs. Now, after we've done that, we made an offer. Dean, you want to talk to them about how to make the offer? You want to go over that again because we have a couple of new people that came in.
Okay, when you're making an offer, there's a couple of different things. Yes, to the seller, the highest price is music to their ears, but there's other things. If they have a good agent on the other side that can explain certain things. When we make an offer, we try to find out what's your time frame. If you're flexible, maybe you're renting right now and have a month-to-month lease. Maybe you live with your family, but maybe you're a little flexible on your move time. We can help you get your offer closer to being accepted with that knowledge, because we can offer that seller some flexibility. You know, maybe that seller is moving to Florida and they need a little time to have their home getting finished being built or whatever they might be doing. So one is the timing, it's giving them flexibility. The other is other contingencies when you're making an offer. Contingencies is a word that's come up a lot more often with offers these days, because it just really means, you know, is your money now? Is your money tied up in a house that you have to sell? Is your money liquid, and can you move forward at this moment?
Can you explain what liquid means, just in case anybody adding that? No one knows.
Just, it's in the bank. You can write a check today for the initial deposit on contract. So if you sit down with your attorney and you're going to contract and you have to write a check for $15,000 for the deposit, 3% down, something like that right now, you have it. If you don't have it yet, and it has to come from a 401k or some other source, that doesn't look as good to the seller, because somebody else might not have that, you know, that situation going on. The other thing is what you're able to tolerate for repairs to a home. Now, when your home inspector goes out, home inspector's job is to look mostly at plumbing, electric, and heating, the roof, make sure that these items are functional and working. If you're willing to accept these items being functional and working, though some could use updating or some could use upgrading in the future, or just certain things that you're not going to pick on, like a cabinet knob, a light switch, an outlet that doesn't have a certain type of breaker in it, but you could change it for a few dollars. By a few, I mean like $20 or $30 to put a GFI outlet in. Then you're an easier buyer for that seller to work with. And that makes you possibly, you know, just a better buyer for them. It helps you get into a home. Sometimes you're looking to forego $1,000 worth of small home improvements to get that house, as opposed to overpaying for the house. And then, you know what I mean? It's just to be non-contingent, just to be easy about how you make your offers. And we'll help you.
I just wanted to add one thing. While you're doing all this, even though it's a verbal accepted offer, the house is still being shown to other people. So one of the things, nobody wants to rush you, but we want to make sure that you're aware of this. Even though the offer was accepted, they're still showing to other people. So as you're doing your home inspection, you got to keep that in mind. All right, let's get the home inspection. Who you pick as a home inspection, who you pick as your real estate attorney are very important. Usually before you even go out to go look at homes, I always suggest you do your research, get those people, build your team beforehand before you go out. So like Eric said before, when you find the right house, all you have to do is make that phone call. Hey, Eric, we found a house. We put an offer in. It just got accepted. And then he'll walk you through that process. And then after the home that you selected, they accepted your offer, then you make the appointment with the home inspector within 24 to 40 hours. Make that appointment as soon as possible. You let the realtor know this is the time frame that the home inspector has. This is the time that I'm available. And then you let the realtor know. The realtor will reach out to the seller's side, and then you make your appointment to do the home inspection. Once that home inspection is done, like Dean had mentioned, then you're going to go through that list with your realtor. You're going to remember other people are looking at the house as well, and the seller's looking who's going to give me the least amount of things to get repaired and whatnot. You want to make sure you're fair to yourself, but you also want to make sure you're getting this house as well. So you're going to go through the items on that list, and then you're going to talk to your realtor. The realtor will make some suggestions, and then you'll send that list over to the other side. You'll agree or disagree on what will be fixed and whatnot. At that point, the contract is getting written up by the attorney. And Eric, you can jump in and talk about that part.
Yeah, in terms of the contract is written up by the seller's attorney. So if I'm representing a buyer, what happens is that I will get a proposed contract from the seller's attorney. My job is to look over the contract and to make changes where necessary in order to protect the buyer. So that could be in terms of mortgage amount, time to close, requirements that the seller has of the purchaser, things they want them to represent, maybe things that the seller's not representing that we want them to represent. Could be adding an additional rider to the contract for certain repairs that were agreed to, or a repair credit at closing, certain things like that. So my job as the buyer's attorney is to make sure that that contract, as I said before, is something that's suitable for you and what your needs are, and make sure that you're protected as you start the process and start the transaction.
Okay, so now the contract's gotten. You make the appointment with the attorney, you sign the contract, it gets sent over to the other side, they sign. Now, once the contract's signed by both parties, now the house is under contract. Dean, what's the next step now that the house is under contract?
Call your mortgage lender, start your mortgage process.
All right, so Billy, Angelo, they got the contract, now what?
So the first step, once we have the contract, is we review the contract with you, make sure that there's everything that you're agreed upon is included in that contract. Make sure there's nothing in the contract that sometimes may eliminate a mortgage from you obtaining a mortgage. The next step would be then we would disclose on the loan. So what we'd send out is our initial loan disclosures to you electronically, or pre-COVID would meet you in person to have everything signed and go over, which would have a breakdown of your numbers, everything that's going on, and your estimated closing costs. You would sign all these disclosures, which allows us, the mortgage bank, to begin the loan process. We would collect payment for the appraisal, and we would order the appraisal, the appraiser to go out and do an inspection of the property, which is just a valuation of the property to make sure that for us as a bank, we're able to lend on that property and that the house is worth what you're buying for it. The loan would be submitted to a processor. The processor would then order your tax return transcripts. They'll update some items on your credit report to show that they're paid current. They may require and ask you for some updated documents, more recent pay stubs, more recent bank statements, copy of your down payment check, and proof of that the money was withdrawn from the bank account. Once all these documents are in, they'll also request that you get homeowners insurance at this time. So shop around, call some insurance companies and get some quotes available. Once you have everything in and we have the appraisal, everything's back, we're going to submit it to the underwriter for the loan commitment. That process usually takes about 2 weeks. So the commitments have been coming in relatively quick. What Eric did say, which is correct, is the clearance of the conditions sometimes take a little longer afterwards. So once your loan's approved, it'll have some conditions that the underwriter has on the loan approval. That, again, same thing. They'll ask for a title report at this time, which we'll receive from your attorney. We need to then make sure that the title's clear. So you're buying the property free and clear of any issues that the prior homeowner may have on it. Once that's in and the conditions are in, it goes in for the clear to close. And then we let your attorney know, and he contacts the seller's attorney, and they schedule your closing.
Now,
Something, if you don't mind me jumping in real quick, Billy had mentioned an appraisal. I just wanted to compare, contrast an appraisal with a home inspection, because if you go to the wrong realtor and you find a house and you say to the realtor, I would like to do a home inspection, the wrong realtor may say to you, well, you don't really need to do a home inspection because the bank's going to go and do the inspection. So you don't have to worry. The bank's not going to loan you the money unless they do the inspection as well. And I've heard that over the years from various buyers that say, well, my realtor told me that, don't worry, the bank's going to inspect. And certainly not Dean and Evans, but certain other realtors that I've come across over the years. And so what you need to know as a buyer is that a home inspection and an appraisal are two different things. The appraiser, like Billy said, is just for valuation purposes. They're not going in and checking the plumbing, heating, electrical systems, that they're in working order, that the roof is free of leaks, that the structure is sound, that the appliances are all working or not working. They're not going to be looking at those things. So if a realtor ever tells you that you don't need to do a home inspection because the bank's going to be doing the inspection, now you know better.
So just to break that down one more time, the home inspection is for you. The appraisal is for the bank, just to make it easy for everybody. Angelo, you had something you wanted to add?
Yeah, just one thing that's been coming up a lot that we just have to be on the same page. It's your employment. Because with COVID, this is probably the most important thing and one of the issues that we've been seeing on some files. If you're working and then all of a sudden you stop working because you can't because of COVID, and that happened more a couple months ago, then we literally have to pause the process until you go back to work. So that's been one of the biggest things that Eric spoke about, challenges with COVID and stuff like that. So one of the things we're required as a lender is within 1 week of closing, we need to confirm your employment. In the past, they used to give us a window of 30 days. So we would confirm you worked. If you close within the 30-day period, we wouldn't have any updated items. And when COVID was really bad in terms of the employment aspect of it, we were actually qualifying people 2 days before the closing to confirm they're still working. And if they weren't working or on pause, then the loan can't close until they're back to work. So that was one of the bigger challenges. I think we got over it because most industries are open. But if you do take a restaurant industry, that's one of them where we're still having a little challenges and some hurdles because of something like that. So I just wanted you to keep in mind, is your job stable? Do you have any issues like that? And if you do, I think the speed of the transaction or having everything airtight in the beginning is important, because we don't want any issues to come up. And it could happen to the seller too. If the seller was selling their house and they lost their job and you were buying that house, it's definitely could be a domino effect. So that was one of the challenges we had. And like Eric said, they all closed, but there was a little blood, sweat, and tears on some of those.
All right, so I just wanted to go over, basically, we got the clear to close. Our favorite word is clear to close. Everybody say it together, clear to close. Once you got that, that means basically your attorney is reaching out to the other attorney and we're setting up a date for the closing. Once that's done, at this point, you, the buyer, you're going to get notification at some point from your attorney, whatever the date is. We usually do something that's called the walkthrough. The walkthrough is pretty much is how you agreed on the house is going to be sold, is how you're getting it delivered. So that's usually done I'm going to say the night before or the morning of the closing. And you're going to close the walkthrough usually takes about 10 minutes. You're going to go around the house. You're going to put your plug in, your plug into the outlet. You're going to check to make sure the faucets are working. If there's an air conditioning, you're going to turn that on. Everything, basically, you're going to make sure everything's working in there, and everything's going to be broom swept and delivered vacant.
How come my walkthroughs are 45 minutes?
No comment. So anyway, after the walkthrough is done, you're going to let your attorney know, basically, if there's any issues or if basically everything's okay. You're going to give them the thumbs up, thumbs down. You're going to let the attorney know what the situation is. If there's any issues, they'll note that and they'll let the other side know, and they'll work something out. Now you're going to go to the closing, which is going to be nerve-wracking. Eric, what do they need at the closing?
Okay, so just to step back a bit. So when your closing is scheduled, other than the walkthrough, the one thing you're going to want to know is how much money do I have to bring to closing, right? So basically, from our standpoint as a buyer's attorney, we're waiting on the bank to tell us how much money you have available from your loan. So you might be applying for a certain amount of money, but you're going to have certain bank costs and fees and escrows are going to be deducted from that. So we're going to get what's called the net proceeds from your lender. So basically, like Billy and Angelo's attorney will reach out to me or my office and say, okay, so your client now has X amount of dollars available. So then we have to go through with the seller's attorney and do adjustments for taxes that they may have paid in advance that you have to reimburse them for, and certain adjustments maybe on your side. And we come up with the number that you have to bring to closing. So you're going to hear that from your attorney, hopefully within 24 hours before the closing, how much money you have to bring so you can go and get your official bank checks from your bank. So when you have that, and you're ready to go and you did your walkthrough, you come to the closing. You're going to probably close at the bank attorney's office. I'll be there and we'll sit down. We'll go over all of the closing documents. Actually, before that, I'm actually going to ask you how the walkthrough went if you didn't call me before. Usually, if I don't hear from you before, that means it went well. But I'm still going to ask how'd it go. Are there any issues? And if there aren't any issues to discuss, at that point, then we will we'll start going through all the bank documents. That could take around 45 minutes to an hour, depending on how big the package is. And we go through all the different, the major documents, the note and the mortgage, and I explain what those things are, why they're important, and basically why you need to know about it. And we go through all the documents, though, and some of them are more important than others. We'll go through all of your title documents. I'll explain your title policy that you're taking home with you and why that's so important. You'll get copies of your deed. The original deed has to be recorded by the county clerk, but you'll get a number of copies so that you can use it to turn on your utilities, register your kids in school, apply for real estate tax rebate programs, all that kind of stuff. And we go over all that at the closing. You get a closing statement to show a breakdown of all the fees and expenses you had and why you had to bring X amount of dollars to the closing. And I show you why on the bank's closing disclosure and on my closing statement, so that by the time you walk out of that closing, you'll have a clear understanding of what you signed, why you spent the money you did, and hopefully you'll have keys as well. Sometimes the seller stays in for a couple of extra days because they need the money to buy something else. And then we discuss that post-closing possession and what that means to you and when you can get into the property. So that's pretty much in a nutshell what the closing is. If everybody's doing their job correctly, it should take somewhere between an hour and 15 to an hour and a half to do the closing.
Now, the best and favorite part is basically when you hand over the keys to the new homeowner.
And it looks like, and it looks like you also get a car as well.
Yeah.
You don't get this car. You get a can opener. But anyway, you get your keys. You're excited. All the documents that you got at the closing, I'm always going to suggest whenever you get a chance, when you get home, you're going to basically make a copy of all those documents, scan them, make a digital copy of all of them, put them on your computer, put them in the cloud. Just make sure you have them somewhere so you always have access to them. If there's no holdover agreement, basically, you know, once you get your keys, I would suggest once you go inside the house, you change the locks, figure out when you're going to do all the moving. Beforehand, there is some time that basically during the closing, you're going to start setting up your electric and all the other stuff, the water and stuff like that. Your agent will give you information on where the companies are and stuff like that, their phone numbers and stuff like that.
Actually, I'll just jump in real quick. That's really important because depending on where you're closing, if you're closing out in Nassau and Suffolk, chances are, especially if the seller is giving you keys that day, the seller will have canceled their service that day. In the city, in the boroughs, they keep this National Grid and Con Edison tends to keep things on for a number of days and gives you time to actually register without any interruption in service. I've had experiences in Nassau and Suffolk where if the seller cancels that service in the morning, within an hour or so, they'll shut it off. So part of what we do is we make sure that we're working with the seller's attorney, that if that the sellers aren't stopping the services until the buyers have had an opportunity to actually register themselves so that there's no interruption in service.
All right. Does anybody have anything else they want to add?
There's a
Because we
couple
got a lot of
questions
questions.
in there.
We have a lot of questions. If not, we're going to rifle through them. First one, please give an example of how much a house can you afford? That is usually when you're doing the consultation with your lender. You're doing the pre-approval. That's when you're going to find out basically, all right, this is what my budget is. This is what I feel comfortable paying. And then when you meet with your agent, if you're doing it both at the same time, the agent will let you know basically, all right, what areas do you want to be in? And then based on that, you'll figure out, all right, I want to be in town X. This is my budget. Does that match? And you'll figure out basically for yourself.
I just want to comment on one thing on that. When you're talking to the loan officer, please, you should have an idea of if you want to live in Queens County or Nassau County.
Yeah.
Different property taxes. They could be $5,000 in Queens. They could be $15,000 in Nassau with the same price point on a house. It's night and day and how much you can qualify for. So it's important just to have that identified.
And then just a quick heads up, the average price home right now in Nassau and in Queens is over $500,000. That's the average.
Yeah.
So you have to take that into account when you're going out purchasing a home.
All right, next question is, am I able to put remodeling costs on a new home into the mortgage?
Yeah, Bill, go ahead.
Yeah, yes, you can. There's two types of loans out there. It's called an FHA 203K loan and a conventional home style loan that you can actually do rehabilitation costs and into the loan amount and make the house your dream home.
All right,
We can get more into it if that's one way you want to go with our consultation.
all right. Next question is, what are the fees for your services? I'm guessing that's open to everyone. The closing costs, the closing cost base will break down. The CD base will break down everybody's what the costs are, but every professional will tell you beforehand, so you're not surprised. The next question is,
Well, no, but for the real estate, but for us, just so you know, the realtors, we get paid from the sellers also.
from the proceeds of the sale. For the next question was for you, Eric. Basically, what are fees? What is the fee for attorney?
Okay, so fees will vary depending on the attorney. You could have attorneys that charge, $3,000, $4,000, or $5,000, and that's really expensive. Then you have attorneys that can charge $750, and that's really on the very low side. But I'm going to tell you that it's probably somewhere in the middle. My fees tend to be, it's a flat fee, tends to be $1,250 for a standard purchase. And I will tell you that if you're going to go much lower than that, if you're going to go into the hundreds of dollars, just remember, you're getting what you pay for. As Angelo said, the average price of a house in Nassau and Queens is over $500,000. So the question is, for your $500,000 investment, are you willing to basically say, I'm going to go with this attorney because he's charging $750 as opposed to $1,250? So is the $500 you save worth it for a $500,000 investment? And remember, you get what you pay for.
Can I just interject? Those attorneys don't end up being $750 either all the
Yeah.
time,
Read
because
the fine print.
and after, let's say, a 60-day process it starts being, there's other fees that they start charging. There's FedEx fees, there's different items if you go into overtime, if you want to call it that.
That's right. And chances are you'll never see that attorney either. Usually they don't
Yeah.
even show up at closings. They have just paralegals that they send or that kind of thing. You will see me at the closing. I'm there at my closings. I have a staff that allows me to be at my purchase and sale closings. I'm a bank attorney as well, and I don't have to go to the bank for closings, so I can go to my purchase and sale closings. It's very important for me to be at the closings, to be with my clients, go over everything with them, and get a chance to meet them. Quite often these days, one of the things about COVID is at the beginning, I'm not meeting my clients in the office. We're going over contracts via phone and DocuSign, and my first and only chance quite often to meet my clients is when we go to closing. So you'll be seeing me there, and I think that's kind of important.
All right, we got a lot more questions that just popped in, so I'll try to raffle through them. All right, what if the price that you and the seller agreed on, the appraiser says it's not worth it? What to do next? Dean, you want to take this one, or Angelo, Billy?
Well, when people are making offers on homes, we usually let you know what the comparables are up front. And I'll have an idea at the beginning if the appraisal is going to work or if it's not going to work. And if we feel that it's not going to work, at least myself and Evans, we let you know, these are the comparables, this is what's going on.
Well, let them know what a comparable is.
Comparable is what other homes, just like your home, same condition, same location, have just sold for in the last 30, 60, 90 days. Up to 6 months for that matter. But so we'll know usually going in if it's going to appraise or not from a bank, and then we'll identify to you, look, here's 6 homes just like yours that all went into contract at the price that you're paying. But unfortunately, the bank's going to look back 3 or 6 months, a few months, and those homes haven't closed yet, and that's where you run into the shortage on the appraisal or the deficiencies on the appraisals. So we'll let you know that up front. We'll have the conversation, and to prepare for that. We'll see if, if you're doing the minimum down payment or you're putting, a larger down payment. If it's a larger down payment, it won't matter. If it comes as a surprise, then this is where Eric and Angelo come in. It's renegotiation is.
Yeah. And the one thing we have to say in regards to that, this market is hot, meaning that the values of the home keeps increasing. So like Dean said, every day you're seeing a new record high. So for an appraisals will look back for the past 1 to 3 to 6 months on a sale. So you're never really going to get the most trajectory of a inclining market because the next house is the highest sale. And especially now, you see so many bidding wars where properties are going over ask. You already know, not that you're paying more, you're just paying the price that's right now because of the competition. And sometimes that means the value is not going to come in, or it's going to be a little short. So you're going to make up the difference with more of a down payment. You know, the only time that runs into an issue is if you're making the minimum down payment and you don't have any extra funds and it comes in short. That's where the attorney and everyone gets involved to see if there's any options at all.
And let me jump in there.
Yeah.
One of the things in terms of a contract that we protect the buyer from is exactly that. If the appraisal doesn't come in and you're not, because if the appraisal doesn't come in and you're putting down, let's say you're getting an FHA loan, you're putting down 3, 5%, anything 20% and below you're putting down. If the appraisal doesn't come in, you're not going to be approved for that mortgage for that amount. When you go above 20% down, that's when it doesn't become as much of an issue. So let's say you're putting down 10% and it comes in low. You're not going to get approved for the mortgage at that amount. So we make sure in the contract that it specifically states you have to be approved for that amount. If you're not approved for that amount, then you have the option of backing out of the contract and getting your down payment back. You also have the option of going to the seller and saying, seller, will you reduce the price of the house to match the appraisal? Because from the seller standpoint, if the appraisal came in low, he goes to another buyer, he may run into the same problem. Maybe the seller doesn't want to reduce the price to match the appraisal. Maybe he wants to meet in the middle. So that's when Angelo was saying about a negotiation, we actually negotiate with the seller's attorney to try to maybe meet in the middle. If you have some extra funds that you come up with, and then the seller comes down a little, maybe there's a spot in the middle that we can meet. That being said, the most important thing to take from this is that if the appraisal comes in low and you don't get approved for the mortgage that's in the contract of sale, you do have the option of canceling the contract and getting your down payment back, so you're not stuck.
All right, the next question is a seller's concession. I'm assuming this is a seller concession. What's the chance of the seller paying some or all concession during COVID?
I'll answer.
All right.
All right, so for that one, the COVID portion of this, it's really just supply and demand. The COVID portion doesn't affect whether somebody will pay that or not pay that. It's really when you're making an offer on a home, if there's a lot of competing offers and they don't have a concession and it's more money in the seller's pocket, then they'll probably look at that. If it's a home that's been on the market for 30 or 40 days and they don't have an offer that they're going with right now, then you've got a greater shot of having them do the concession to get their home sold. So that's really just supply and demand, what's going on in the house. The COVID factor really doesn't play a factor, in my opinion, on that so much.
I'll give you an easy answer. It's what's attractive to the seller. That's basically it. If the seller, based on the other offers that are on the table, if there's an offer like Dean had mentioned, they don't have a seller's concession and it's the same, it's kind of equal price, they're probably going to go with that versus something with a concession. I think the last question we have is, can I use my veterans eligibility to buy a home?
Build a
Anybody
home.
wanna take that?
Build a home.
Build a home. I'm not sure if that was build or buy.
There's build.
It says
To build a
but
home, no, you cannot, unfortunately.
okay. I'm not sure if you meant build or if you meant to say buy instead of build.
But if it was buy, the answer is yes, and they could actually put.
No,
He's
you gotta
got
build.
Build, yeah.
Okay. All right, folks, that's about it. It's 7:06. I'm sure you guys have a lot of questions, a lot of further questions that you have. We're always available. You can always reach out to us. You're going to get an email basically with some questionnaire. Please fill that out. If you have any other questions, if you would like to do a one-on-one, do not hesitate. Reach out to us. Our contact information will, you'll get an email basically with our contact information. We'll be doing this on a regular basis. We'll be cutting them down to 30 minutes. So if you want to do a consultation one-on-one, again, we're available. So Angelo, you want to give them your contact info?
Yeah. So if you need to reach out to me, the best case is my phone number. It's 516-902-3933. And that's the best way to reach me.
Billy?
My phone number is 516-841-3344. It's my cell, text, call anytime.
Mr. Eric?
My cell number, 917-520-4502. My office number, 718-575-0009.
Mr. Graber.
My cell is 516-527-9549.
I'm Evans. You can give me my email, which is my first name, evantz@yahoo.com. You can also reach me on my cell, 917-975-5985. Hey, Dean, hit him with the website.
www.mynyhomesales.com.
All right, guys, thank you for watching. If you have any
Thank you,
questions,
everyone.
you know how to reach us. We'll be in touch with you soon. If you have friends and family who are interested, you think they'll find value in this, let them know that we're doing these on a regular basis. For the whole group, I just want to say thank you for watching and have a good night.
Good
Good
night.
night. Bye, guys.
Great night.
One sec.